Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Hey, if you like futures because of the tight spreads and clear setups, go check out Blue Guardian Futures. They let you start trading futures with up to $450k in funding. The best part, you keep 100% of your first 15k in profits, then 90% after that. No activation fees, weekly payouts, and they're sponsoring Chris Eubank Jr. and Birmingham City FC. Go take a look at blueguardianfutures.com or click the link in the description.
What's going on, guys? This is Brinks Trades coming to you live with another week of breakdowns. Hope everybody is doing well. Hope everybody's doing well. So again, I'm back again. If you guys don't know me, I am the resident indices analyst for the Trading Nut podcast. So every week I come on here and basically break down charts, what I think is going to happen for this week and next week. And again, I've been doing this for about 2 years. And so shout out to the Trading Nut podcast for letting me come on and do this. But yeah. Let me go ahead and add the little overlay. So we got our backgrounds, cool. And as usual, I love to see where people are calling in from. Again, we get traders from all over the world to tune in and watch. So hopefully you guys are calling from, cool locations and enjoying your summer. So drop that in the comment where you're calling in from or watching in from this today. But again, I'm the indices analyst. So every week I come on here and break down a few pairs. The indices, the major currency pairs and things like that, through the lens that I see, which is kind of like a smart money lens and a mix of other things that I've seen and done over the past few years. So again, I want to start with dollar because again, dollar is the overarching pair that if we understand where dollar's going, then we can understand and make an analysis on where we think the rest of the market's going to go. So I want to start on the weekly time frame on dollar. So a couple things that we wanted to see last week that didn't exactly play out. So again, we wanted to see the market really retrace back into this range here and then start to go lower. This is what we had called out over the past few weeks. But if we look here, we can see that there is a small volume imbalance from where this candle, I drag this down, this candle started or closed where this candle opened up at, right? So we had a huge volume imbalance here. And for the first few days, pretty much the majority of the week we spent really rejecting off this range. So I thought we were going to get a really good rejection and continuation to the downside. Again, we are on a downtrend on dollar. So we've really been trading against that. So we're trading with that bias for the last few weeks. Honestly, the last few months, really since the beginning of the year, I believe, it's been pretty much 6 months of just downtrending action, which is pretty good. So right now we're getting a rejection from that range, and we actually violated the level that we wanted to see respected. So again, we haven't. If we're looking at the weekly time frame here, there is one last level of kind of defense that I want to see respected before we can start to transition or maybe even change to the idea of an uptrend. But again, we have this bearish order block sitting here at 97.77. So again, I want to see the market respect that level, and I want to see the market continue to go down based on that. So if I go down to the daily time frame again, we see that the market is really respecting a few levels, and there's one last kind of volume imbalance area that I will be watching again for us to respect. It's going to be this zone here, which really lines up with that low end of that order block. So it could be another potential area for us to respect and go down. And so we're not quite at the point yet where I want to consider this a long-term uptrend. We're probably in a short-term uptrend. I can see the market really running up to here and then potentially going lower. And if this doesn't happen, then I'm looking for a clean break of structure here for us to continue and go even higher and start to really transition that idea from a bearish one to a bullish one. But as of now, we're still at a weekly pullback level, and we really haven't broken structure in the daily. So there's not really too much here that we can, excuse me, not much too much here that we could really go off of right now. So this might just be a pair that we're going to probably step back from. Again, we don't trade dollar, but use it as an analysis. So maybe we'll get some more clarification on euro. So euro actually is playing out to the T. It just didn't finish its move, which we might have thought might have happened over the past few weeks. But we traded back into this weekly fair value gap range here. We are currently respecting the daily levels that we called out last week here. So this could be a really good setup for a move next week that could really play out. So that's what I'm going to be looking for here is how do we respond from this zone right here? We've wicked off it twice. So ideally, what I want to see here is a clean break in market structure. I don't know if it's taking out this level here, or it could be even taken out on maybe a smaller hour time frame level like here. And so that level here, the conservative answer, or the answer that I feel the most comfortable taking, is going to be if we see a break over 1.174. That's going to be the 4-hour break of structure for me. That's going to really signal the fact that it's time to go back up. Until then, it's all just kind of noise. Sometimes prices chop on their pullback level, right? And they just kind of dance around. But really what I will be looking for is if we get a start getting bullish breaks of structure over 1.1748, and then take things a little higher. So that's what I'm looking at for euro. Again, this is not going to be too long of a trading session, or of a chart analysis session. So same thing with GBP USD. I want to go to the daily time frame and see what's going on here. And as you can see here, we've really inverted a set of fair value gaps. This also looks like it could just be running down. We do have this order block here that I want to see the market respect, potentially. I would say if we run and close past this low here at 1.1 or 1.33717, that's going to really signal us want it to continue to go down. So I'm just going to put, this is going to be what I call a fail-safe level. And all that means is that if it goes past here, then my idea is no longer valid. So this is that bullish order block. So ideally, if we're looking at this, I could see a world where we do something like this. So that's what I'll be looking for. Again, if we look at the weekly time frame, we want to see if there's something lining up with the idea that that dollar has, or in euro has. And so far, really not too much here. That's gonna give us a bullish trend and bullish idea. So I'm gonna be watching this, but ideally, there's really hasn't been a break in structure yet on any of the time frames. So I just want to see what's going on here. But we are starting to invert some fair value gaps that would usually be held. And so really the test here, these two levels, to see if we continue to go higher. So I'm on standby by that. But just transparently also as well, I've talked to my student group about this, that during the summertime, volatility is really hard to come by for a lot of reasons. Holidays, traders taking times off desks at the institutional level. And so a lot of times this Q3 can be really slow going into the fall. So with that being said, I really transitioned back to NASDAQ, which is where I'm taking a lot of my trades on this week. We actually had 3 winners this week, each for about 100 something points, 2 to 3 contracts on NQ as well. So that ended up being a really good week as well. So again, what I want to see here. Excuse me. No, I keep yawning. So I want to see how, if I get rid of all this, I really want to see how the market reacts to this propulsion block here. Do we break structure? Do we keep going lower? Do we respect this level here? Right now, we're currently respecting the middle 50% of that consequent encroachment level. We swept the last 2 previous days' lows as well. We've kind of had yesterday was what we would consider an inside day, where the high and the low are inside of this previous candle. We came down and swept this. So I want to see what's going to happen next, and if we're going to go higher. So let me jump down to the 4-hour time frame. And right now, it looks like we could be potentially going lower to start the week off. Um, but right now, overall, this is just a lot of consolidation. And so when we're trading in between a range or two, really looking for the next movement, whether it's a leg up or a leg down or a push higher or push lower. But while price is trading in this lens, it's going to be really hard to um, predict a long term estimate on where we think price is going to go. So we'll be looking intraday on this to see how we respect those levels. Um, let's jump to ES really quickly. ES is very much in the same position where if I go to the higher time frames, I can definitely see that we're trading into an old order block here. There's also a fair value gap down here. So if I go to the daily, that's what I'm seeing. If I go to the weekly, I'm hoping it tells the same story. Yep. So we do have a fair value gap. That's at the very low end of ES right here, as well as this deep imbalance here that's sitting over the high. I honestly, when I wanted last week, what I wanted to see is the market really, actually the past couple of weeks, is trade back into this level, then go higher. Really, leave that open, and really fill and mitigate that fair value gap right there. So I will be looking for the market to come to back to this all-time high, just sitting right there. So nothing's really changed from last week, except now I'm looking at this fair value gap here to see if the market might just run into that little small gap and then continue higher. So two really big zones that I'm looking at. They're pretty big, pretty wide, but um, but ideally that's what I want to see happen. Uh, and I'm gonna leave it here just in case. There's always a chance we could run back down into this level, but really want to see how we evaluate this fair value gap here, and if we just test that really quickly and then go higher. With these wicks and price action, I also will outline the weekly consequent encroachment level of that bottom wick. So let me do that. Oops. $6,269 is the level that I'm looking at. So for consequent encroachment of this wick too. So that's the third level that I'll be looking to see. And usually how I read consequent encroachment is kind of like an if then statement. So if the market runs past this level, then I expect it to go take the low and probably run here. If it has a hard time breaking through that level, then that could signal us wanting to continue to go higher. So again, that's what I'm looking at and looking for. Also want to note that we did technically sweep the all-time high this week as well. So this could be a trade back into the range for the first half of the week or just a start of overall reversal. So we'll get more info there, but these are the levels that I want to see. I'm still sticking with this overall bias of the market trading lower and then higher. So again, this low point could be the CE level, this fair value gap here, or this bigger one. But ideally, I want to see the market. I leave these kind of like for the worst case scenario, which is down here. So, or the most optimal scenario, I guess, would be down here. So that's what I want to see potentially. And let's look at YM. So let's drop down to the daily time frame. And actually, before we do that, I'm going to open up the weekly. And then I'm going to show y'all this right here, this open fair value gap that's sitting right there. Really, we're consolidating, right? And so we know we can see through this consolidation, we are currently respecting consequent encroachment, but I wouldn't be surprised to open up the week if we just dip down into this range and then went higher, especially since YM acts a little crazier than the others. So I could expect it to do something a little bit more volatile. So again, I want to see the market trade back into this range and then go higher. We could respect this, but because we did consolidate the last few days at this level, would not be surprised if we ran down here to that level as well. So I'm looking at these two zones basically for the market to potentially turn around in. So what's going on, Tony? Hope everything's good with you. It's one of the students in the mentorship group that's really killing it right now. So I saw you had some profit shots in there yesterday or a couple of days ago. But yeah, that's everything pretty much. This is a really short session today. I'm gonna go through gold really quickly because that's the one I know a lot of people look at. Um, and so gold is interesting right now because uh, gold is interesting right now because I wanted to see we pretty much are in chop. I mean, this is between this high and this low. It's the levels that I drew out. This high right here where we have buy side liquidity, and then this level right here where we have sell side liquidity. These levels are really just being traded back and forth. So this consolidation is chop. I don't like this. Even if I go to the weekly time frame, it's just nothing clear. You can see there's a little bit more case for bullishness, but it's a little choppy still, which makes it really hard to trade in the day to day. So ideally, again, I want to see this continue to rise and go higher, but it depends on a few things. If we stay above this inverse fair value gap right here, which is now orange, my books again, color code nature fair value gaps with different colors. They don't have to be the colors that I use, but they just need to be something that you can keep track of. But right now, it's still very much in a messy situation. I do want to start to see bullish breaks of structure. So if we take out this high right here, I would start to look for bullish opportunities. I'm just going to make a note. It says bullish over this level. And really, again, I want to see a clean break of structure, meaning that I just want this high taken out and closed above, not wicked off like it is there. So again, start seeing breaks of structure. It's letting us know the market's really ready to reverse and continue to go higher. So that's what I'll be looking for in gold. So it's pretty much all I have for you guys. I know it's a very short session today, but I want you guys to, if you have any questions, feel free to drop them in. Again, follow me on social media. Which is right here. Yeah, Brinks Trades. And then also, if you're not subscribed to the YouTube channel, you can find that on youtube.com/Brinks Trades as well. And then also my community, which is Talented 10th Trading. .com. If you check that site out, you can definitely join my free Discord, which I basically break down updated charts, give advice on current market situations, just general trading advice, which will definitely help you guys on your journey. A lot of times, again, we look at the markets on Saturday when the markets are closed, but we never know what the markets could do come Monday. This market could look totally different when it opens up. Anything could happen geopolitically, right? And so making sure that you stay locked in with me, as I give updates on these things are, good. Now, for the people that want to learn how to trade, actually want to see me do executions on the charts, that I actually have a mentorship option in that as well. I had a sale going on for $49.99 a month, basically, where you can be a part of that. And I'm going to run that probably through this weekend. So it'll be a week. But again, pretty much for the cost of a 50K challenge, you get access to somebody with a decade of trading experience who's been able to come in the trenches and really learn, strategies and how to employ them and how to manage risk over the course of a 10-year day trading career. So again, if that's something that you have not checked out, definitely check it out and go from there. So again, hopefully you guys had a great trading week. I know I did. I had a really good set of trades this week, and I'm looking forward to next week. If you guys have any questions at all, hit me on social, and we will, see y'all in the call and see how everything plays out. All right, so I'm staying on. I'm turning my camera off, but if you guys have any questions, drop them in the box, and I'll answer them. Maybe again, general trading questions, another chart that you want me to break down, etc. But hopefully everybody, gets some value out of this, and I go from there. So I'm still here for the next 5 minutes. Just turn my camera off.
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Hey, if you like futures because of the tight spreads and clear setups, go check out Blue Guardian Futures. They let you start trading futures with up to $450k in funding. The best part, you keep 100% of your first 15k in profits, then 90% after that. No activation fees, weekly payouts, and they're sponsoring Chris Eubank Jr. and Birmingham City FC. Go take a look at blueguardianfutures.com or click the link in the description.